Peter, welcome to 2020 Investments. Today I want to help you understand what an exchange-traded fund is.
Susan, that will be very helpful, as they have been in the news lately, and I understand they are leading the way in helping democratize the investment landscape.
First and foremost, an ETF is a financial security that can be bought or sold by your broker in the same way that you can invest in single stocks or bonds. They were first offered in the US 20 years ago and in Europe 12 years ago.
Why are they different to single stocks?
In a typical equity ETF, the investor will pay a small management fee, and for this the provider will build a portfolio that contains a diverse range of equities, and it is this basket of equities which one buys with a single order to your broker.
Presumably with a bond ETF, the provider assembles a portfolio of bonds and offers this on a one-click basis.
Exactly. But they are constructed in a way that means they are open-ended investment vehicles, which in Europe sees them issued as UCITS compliant.
Who gets to decide which stocks or bonds are included within the ETF?
That is a good question, Peter. In the early days, it made sense to offer the combinations that investors were familiar with, such as buying all stocks in the S&P 500.
If I don't like a particular stock in the ETF, can I ask my broker to sell it?
No. It doesn't work like that. When investing in an ETF, your investment only provides the exposure which is described in the ETF's fact sheet. When an ETF says it will track a given benchmark index, what it is really doing is to prescribe the inclusion rules for which stocks or bonds the ETF manager will invest in on your behalf.
I must say, Susan, that does sound like a really simple idea.
Indeed it is. As the product range has evolved over the last 10 years, there is now a very extensive list of market exposures that one can access via an ETF, and first and foremost, this is why the industry has grown so much.
As Singapore seems to be a strong economy to me, does that mean I can invest in an ETF to gain exposure to all of the major companies that are included in Singapore's main stock index?
Yes, and indeed many other stock markets. The last 2 or 3 years have seen a wide range of fixed income-based ETFs. These include exposure to indices that only track investment-grade bonds, or regional government-based bonds and so on.
What about alternative investments, such as property and the like?
Not surprisingly, there are ETFs that provide exposure to the property market in various ways, such as real estate companies or investment trusts.
So what's the catch?
Peter, there is no catch as such, but there is more to an ETF than at first meets the eye. For that reason, it is necessary to undertake a sufficient level of due diligence when selecting an ETF for one's portfolio.
Now you have me worried.
Like any market where there is a very wide range of products available, it pays to do one's homework. Not all ETFs are constructed in the same way, and you may well have heard of some commentators talking of swap-based ETFs.
Indeed I have.
Many investment managers prefer ETFs that hold either stocks or bonds. If nothing, the investors can relate much more readily to what the investment proposition is.
Susan, many thanks. I'm a buyer, and look forward to studying what are the best markets to invest in, whether there is an ETF that I can use for that purpose. Indeed, democracy in action.